got operating control of at least 18 businesses out there employing roughly 100,000 people. 22, not to shortchange you.
Climbing.
But that gives you a much different perspective. I mean, it's one thing to just to sort of put your money in and hope for that return. It's another thing to actually be an operator itself here. What is the health right now that you're seeing in the credit space?
Lots of pressure. You know, the way, and Romain, we talked about this last year at this conference. Last 2024, 2025, pressure is being amped up. High interest rates. People can't make them. Default cycle picks up. Over the last 4 months, last 5 months, you have an oil shock reverberating through. Unclear just how deep. And at the same point in time, software has accounted for 20% of high-yield portfolios. Software, the parts of software, existential today.
Is the software concern, to the extent that we've seen it play out in the media, is that appropriate? Because it seems like you'll hear from some companies saying, look, we're probably a lot stickier than even with AI out there than we would be without it. I know there's some other software companies that just have awful business models, but they were probably going to go away anyway.
The software concern's really appropriate. And look, and by the way, there's nothing systemic about it. It's like, the telecom bust in 2001, 25% of telecom companies defaulted. Oil and gas crash, 2014, 35% defaulted. So if there are 15, 20% defaults in software, it's concern, yes. Systemic, no. Systemic's a whole different thing.
So the concerns in software warranted at this point, in your view. I wonder if you see any opportunity in software, because whether those concerns are warranted or not, you have to imagine maybe there's some babies that have been thrown out with the bathwater.
Too early.
Too early.
Yeah. So, and I'll just give you our perspective. For the last 2 years, there have been busted software companies. We have looked at them. We've had a team of people looking at them, studying them. We've hired technology and consultants and advisors to help us. And what we find is when software it goes bad. It's not just a gentle decline. It goes off a cliff. The business model gets outdated. So when we look at this software cycle we're in, the software default cycle, we think it's going to take 9 months, 12 months to figure out which ones are really popping. And I think to our point of view, there's product out there, but we're just being very careful.
Yeah, I was wondering, what kind of stance do you take in that sort of environment? Should we see defaults really pick up when it comes to the software side? Is that an environment where you can be offensive, or maybe one where you'd want to be a little bit more on the defensive?
There's one thing you said, if I could perhaps correct. Yeah, please, humor me. Default rates in 2024 and 2025 are 6% a year. Those are Moody's default rates. 2 years back-to-back 6%. Those are big numbers. In COVID, it was 9% for 3 months, and then it was gone. So we come into this cycle today already with lots of headwinds, lots of pressure. So everything which the oil shock does, software reverberating does, it just compounds it. I think it's caution. Caution's merited. And by the way, the opportunities, please, in a good year, we'll invest $6-7 billion a year. We've got about $22 billion.
Well, let's talk about those.
We've invested $1.5 billion in the last 6 weeks.
In the last 6 weeks.
Don't annualize it. Don't annualize it, right?
I've already done it.
But it gives you a sense as to what's starting to come on off.
Well, then I am curious. You recently, what was it? Your special situations, your fifth fund on the special situation side. That is a pretty broad mandate.
It does.
So give me a sense here as to in this world we're in right now, where you go after opportunities. Is there a focus to it or what?
Oh, absolutely. Right. So software obviously is not a focus. Right. What we find is the contagion caused by everything I said. So if you look at anything associated with home building or building products, it's in the tank. Chemical businesses, once in a 20-year down cycle. Consumer brands in trouble. Europe is about...
You put a lot of money into Europe.
we have,
Yeah.
30% of the overall high-yield market struggling economically. Germany probably going into a recession. Real estate as an asset class, slow-moving tsunami over the last 2, 3, 4 years, picking up speed as we kind of go, right? So this is not, Romain, it's not pockets of opportunity. It is like large chunks of industry and businesses.
But you rattled off quite a few areas. But the idea you see that as opportunity seems to suggest you think the cycle that we're in is a cycle, that this is a down cycle and that these will rebound.
Yes.
Okay.
When we invest there, Romain, we look at it even a little, we add a little something.
Okay.
Sure, we think they'll rebound. But we think a lot of these businesses which get troubled, there's a lot of upside operationally by going in and fixing them. So when we are buying, we're not just buying for the rebound.
Yeah.
We are saying this is an undermanaged business. Let's fix it. It's got a lot of upside. The rebound is just extra if and when it comes.
I do want to just talk a little bit about potential ripple effects here, because I'm taking a look at an interview you gave to some of our colleagues on the print side. When bring it back to software, you talked about how this software pain is going to taint everything across credit. And with that in mind, I mean, we just got through a first quarter where the redemption quests from some of these BDCs were really interesting to look at. And I wonder, should this continue, would you expect to see more quarters of these types of levels of requests to pull money?
I think our sense, when you see this happen with these open-ended funds, it's not one and done. When people put in redemption requests and they can't be fully redeemed, it creates even more redemptions as you go. I think our sense would be 12 months, 18 months for this cycle to work through. So it's not over.